Welcome back to SugarMamma's Fireplay. Today, I'm so excited to bring you an episode that I know will resonate with so many of you who are ready to take your first steps into investing, or even if you're just a little bit hesitant because, let's be honest, investing feels overwhelming, especially when we first begin. I'll be joined by Jessica Amir, a market strategist at moomoo, an innovative online trading platform designed to make investing accessible and empowering for everyday people. Jessica will share her personal story of how she got started in investing, her journey to finding the right investments, and how she uses moomoo to research and buy her shares. If you've been wondering about how to start building your investment portfolio, or you want to actually elevate your own investing game, today's episode is the perfect one for you. And of course, a huge thank you to moomoo for sponsoring this episode and helping us bring these tools to you right now, and of course, those valuable insights directly. All right, Jessica, thank you so much for coming in today. I like to ask everyone how you are. Not just a surface level, how are you, but how are you?
I think I'm feeling a little bit sore. I've been training, doing a lot of sport and exercise lately. So physically I'm sore, but yeah, I'm excited. I'm excited. November, December is around the corner. 2025 is going to be an awesome year. So yeah, I'm pretty good. How are you?
Yeah, I'm good. I know that feeling about being sore. It's funny, I took a bit of a break from training and I just got back into it recently, and I kind of like that feeling of being sore because you're like, okay, I didn't just have like a flaky workout. I actually worked those muscles efficiently.
Pushed it.
And I'm so excited too about the year coming to an end and having just a moment to finally press pause and just take stock of what's happened during the year and think about, what I want to do for 2025. So I hear you loud and clear. I'm really keen to hear about you and your personal story around investing and more importantly, getting started, because I feel like for so many people, that's the biggest block for people is actually getting started. Once they've bought their first parcel of shares or they bought a couple of different shares, they're kind of sailing away smoothly, but it's that initial hurdle that really freezes people, like, that analysis paralysis. So I want to break down, most importantly, how you got started and obviously then where you're going. So my first question to you, and again, I should probably remind everyone that obviously everything in this episode, as is all of my episodes, are general and advice only, and obviously for your educational purposes only. But Jessica, how did you personally get started with investing in shares? And was there a defining moment in your life where you went, all right, this is the asset class for me, this is what I want to invest in? Yeah,
so a great question. So I think, the word asset class may not be synonymous to a lot of people. A lot of people might not know what even an asset class is. So when I first started investing, I think I was 21, and it was simply because my uncle said to me, Jess, you really need to start investing. So I was like, okay. And then I was like, what do I pick? And I didn't know what on earth I was doing. So, yeah, back in the day, it was all, over the phone. So I found a broker, and then I simply picked up the phone, and then I literally, was asking my uncle, what do I buy? And he was like, just buy one of the biggest companies that you can think of. Like, what can you think of? And that was probably the antithesis of, stock picking, like becoming observational and then thinking about what I could possibly invest in that resonated with me. So I don't know, that probably doesn't really answer your question. Yeah.
No, it does. I mean, it's so interesting you say that, because the conversations I've had with people who have substantial, 7-figure, even 8-figure share portfolios, most of those portfolios were born out of the recommendation of a family member who told them the same advice. Buy shares, buy and hold the shares, and stick with the companies that the big blue chip investments and companies that you see and use every single day. And that seems to be the common denominator. So I think, there's some very wise advice that a lot of people have been really appreciative that they've heard and actually acted on. Now, obviously, the world has changed. You don't ring up a stockbroker anymore like, you would in the past. There are so many, obviously, online platforms. What are the most sort of first and most important practical steps you would recommend that someone take if they want to start investing in shares? And, obviously, you work for moomoo, and obviously moomoo is a proud sponsor of today's episode. How do we make this whole process less intimidating for just the average, person who just wants to build realistic financial freedom?
So it's a great question. I guess there's many ways to answer that, but for people who don't know where to start or they don't know where to begin, I'd say just breathe. Because investing nowadays is so different to when you and I first started, like 18 years ago. It was very different. It was all physical paper. And now with the advent of technology and apps such as ours as moomoo, you can literally buy a stock that you like or buy a name that you know. So, for example, if you've got a smartphone, you can buy shares in Apple with as little as $5. So there's this thing called fractional shares, and I guess my advice would be to start out small, invest often, and as often as you can. And whenever you get a lump sum, say a tax return, then to think about investing in that.
Yeah, any sort of additional windfalls that do happen to everyone in the reality of life. Make sure you don't succumb to the lifestyle creep. Use that to build that portfolio further.
Yeah, absolutely. And then so a lot of my friends and some family members, younger members, like cousins, they'll ask me, how do I pick a stock? Like, or how do I actually buy a share? So after you've set up the app, let's say if you joined moomoo, you signed up, you literally search for the company that you want in the search field, and it's as easy as buying, nappies with Coles or Woolworths app. You literally just search for what you want, you click buy, and then it'll ask you to fund your account. So you can either buy, Apple, or you can buy Nvidia, which is the world's biggest company. You can buy that with $5. And then if you want, you just keep on buying into that each and every month. So I personally would also recommend that people at home or listening to this would use investing as a saving tool. That's how I personally did it, and that's how I fast-tracked my wealth and got a six-figure portfolio as well, because it means if you're investing regularly and often, you're also buying into the dips. So the markets go up over time. The S&P 500, the world's biggest 500 companies, that's the S&P 500, that index is up 25% this year, and it's had falls throughout the year of say 5%. So it's fallen and then it's rebounded again. But the fact that you're investing each and every month, whether it's $5 or $100 or $500, you're consistently buying and you're dollar cost averaging into the market. So you're buying stocks at cheap prices when the market falls. So that would be another tip for someone to get ahead quicker and sooner.
I have to say, that, talking of habits and savings, that habit of regularly investing on a consistent basis and understanding that it is a long-term game plan. It's not, this is money that you're investing for your financial future. It's going to be volatile. It's naturally volatile. And that's not necessarily a bad thing, but showing up consistently for your financial goals, particularly when it comes to investing in shares, is so incredibly important. And if you can create that organic habit system, your whole journey is so much easier, but also you're increasing your opportunities for success on a sort of the magnitude level is huge. When it came to you actually finding the right investments, and obviously, your uncle it was that suggested you, how did you pick the right investments? And did you ever get scared that you were going to make a bad investment and, you'd feel completely overwhelmed and frozen with fear?
So the answer is no. I didn't have a fear because I was so young and I was just told to get started.
Ignorance is bliss.
Ignorance is bliss. But also my family come from a property rich background, And, they'd preached at the dinner table that the property market is very similar to the share market. Over time, they go up. And so, we've had the GFC, we've had the another significant financial crisis in 87 after I was born. And so markets have always recovered. And so if we take a long-term approach, my uncle was like, just take a long-term approach. When the market's down, just buy more. Well, and that'll fast-track your wealth.
It's like a stock take clear. It's like Black Friday sales.
Absolutely.
Jump on board. You're able to buy the same quality asset, but at a substantial discount and obviously access an even better yield.
Yep, absolutely.
So what advice would you give to beginners who are feeling overwhelmed, by that sheer number of options out there? Like, would you say, all right, stick with something like an ETF or a listed investment company where you've got that immediate diversification and a good solid base to build your portfolio from? Or would you say, no, go and invest in the companies that you're familiar with, that that you want to be, a part business owner of? Like, what would you recommend people who just are stuck in making that initial first decision on what to invest in?
It's a great question. Many ways to answer that. But I would say what I tell my friends is to invest in a company that they know and that they can think of. And then they're like, well, I don't know what to pick. I don't know what to think of. And then so I might refer them to some of the things that we've been speaking to moomoo clients about, or moomoo investors about. But before I just embark on that, I normally tell people how to pick a stock so they can, fish for themselves, because I don't just want to provide someone a tip, or they shouldn't just hear something on the news, hear Alan Kohler speak on the news. It's not about that. It's about teaching people how to fish so that they can comfortably do it for themselves and have confidence in that. So how do you pick a stock? Well, it's really basic, and you can make it as complex or as simple as your mindset is. So Peter Lynch said, become observational. What does that mean? So just be observant. What is going on in the street? If you simply do this, you can have a leg up on Wall Street and potentially outperform the market. So what do I mean by that? Well, if you see more EVs on the street, more electric vehicles, more Tesla, maybe that would prompt you for, hang on a minute, the world, even Australia, who's quite behind in EV policies, are increasingly moving to, push more EVs. And then I go, okay, well, do I look at Tesla? And then I might use an app like moomoo. I'll go on and I'll search on our app, on Moomoo's app, and then I'll literally search for Tesla, and then I want to see the next and most important thing that I can about the company, not that it's physically out and about in front of me physically, but also that it's growing its revenue and earnings. And so people say that stock picking is gambling. It's not. It's not. So revenue and earnings drive share price growth. If you have a stock in your portfolio that's red, I can guarantee that its earnings and revenue might be falling. So use Moomoo's app as a great example. You can easily see on a pictorial format if their revenue and earnings are expected to grow. If Wall Street thinks that they're going to continue to grow, then that might be a really good sign to buy into the company. So stocks don't always go up in a straight line. So tip number 3 would be to think about buying into pullbacks. And also, tip number 4 would be to validate your trend. So validate the sector that you've picked, and validate the stock that you've picked. So if you've seen that its earnings and projected revenue is projected to continue to rise over time, remember, earnings drive share price growth, revenue drives share price growth, then you want to see, okay, what do investment banks think about this stock? What does Morgan Stanley, Goldman Sachs, the biggest banks in the world, what do they reckon about Tesla? Is its shares going to be higher in 12 months from now? If the answer is yes, you've kind of validated and given yourself that, that confidence boost and that assurance that you've actually picked a stock that will probably be much higher in a year, 5 years from now, 10 years from now. So never invest in a company if you don't believe in its long-term success. So, stock picking tips, and then back it up with data, for example, from Moomoo's app.
People say that, gambling or investing is gambling, but it's only gambling when you haven't done your research.
Totally.
Now, I'm going to ask you a couple of, personal questions. I want to know, how do you personally use the Moomoo app to make your investment decisions as to what's the next asset class, or not asset class, but the next, stock you're going to invest in? And to be a little bit cheeky, under obviously the premise of general advice only, what are you investing in right now? Like, what's really, catching your eye?
That's a really good question.
Sorry, it's a little bit cheeky of me, stealing your IP, but I'm fascinated, and I think a lot of people, are interested to hear, what are people investing in right now, particularly, experts like yourself?
So my self-managed super fund, which I pick my own stocks and ETFs, I fully manage that myself. That's more long-term, so I won't talk about that one for now, but I'm happy to. It's mainly dividend companies, long-term thematics, one of which my biggest position is a gold company and is Newmont. Mm-hmm. And my other big position is BHP, which is one of Australia's biggest dividend payers and also the world's biggest resources company. But that's just a tip of the iceberg. But if I think about my personal portfolio, just answering your question directly, my biggest position is NVIDIA. And then the other thing that I'm holding that have quite a large position in is the world's biggest Bitcoin ETF called IBIT, IBIT. And so why have I invested in those? And how would you come about even to think about considering investing in those yourself? Well, we spoke about the trend, thinking about big picture. Where can you see the world's pivoting to? So you might see on the news, you might look at Moomoo's app, for example. You might look on our featured lists. So if you click on markets, on the markets tab on our app, and then you click on US, we've got a section that's called Heat List. And this basically illustrates the most talked about stocks and the most traded stocks on Moomoo's platform. And number one is NVIDIA. That's my biggest position in my portfolio. And as we were saying earlier, that is the world's biggest company. And so last week they reported their revenue grew 94%. So remember we were speaking about earnings growth, and revenue growth drives share price growth. So NVIDIA is actually not only the world's biggest company, but they're growing their earnings at 94%, which is astronomical. There's no other company of this size in the world like it that's growing their revenue by that much. And because of that, they've been able to be a top performer on the New York Stock Exchange. And so if you invested in them in the beginning of the year, your shares would have gone up by about 174%. So that's an example of a stock that's in my portfolio. So then the question might be, could you use Moomoo's app to kind of validate, is it too late to buy in?
Yeah.
Well, the answer is no. So if you go onto that heat list section and then you were to click on NVIDIA, click on the company section, and you scroll down, and then you'd have a look and you'd see that its revenue and earnings are projected to continue to grow. And so Jensen Huang actually said, the CEO of the company, said that they're seeing unprecedented growth for their latest Fandangle chip. It's called Blackwell. But they're seeing unprecedented growth from the world's biggest company. So you don't need to reinvent the rule book. You don't need to search for stock tips. But what's really assuring to me is that 40% of NVIDIA's revenue is actually underpinned, reoccurring from the world's biggest companies. So the world's biggest companies are buying NVIDIA chips. So Microsoft, Meta, Amazon, Alphabet, which is the owner of Google. So they make up 40% of NVIDIA's chips, and they're buying more and more chips every single year. So if you're looking for a stock pick, you don't have to go far. Look at the world's biggest company. When its shares pull back, and there will be pullbacks, remembering stocks don't go up in a straight line. So buy into the pullback, and I'm not a betting person, but I can say you might guarantee that their shares will be higher in 12 months from now. And that's because, like $200 billion has been touted to be spent in NVIDIA from these companies that we spoke about, those magnificent 7 companies.
Gosh. Look, a reminder, everyone, that this is obviously not product advice. You've got to do your research beforehand and obviously understand, your situation and also the time frame available available to invest. But we're going to take a very quick break because I really want to talk about empowering, I guess, the baby investors, the new investors, the ones that are still, stuck. So we'll take a quick break and talk about something that makes investing simple, accessible for everyone, and that is moomoo. With moomoo, you can trade over 22,000 shares, ETFs, and more across the ASX, US, and Hong Kong markets, with low fees and great tools designed to help you make confident investing decisions. And if you ever get stuck, moomoo's 24/5 customer support is here to help guide you, and the app's vibrant community will inspire you, led by experts such as Jessica and Michael, who you will meet in the following episode. This offers live stream and insights to help keep you informed as an educated investor. It is no wonder that moomoo is backed by a NASDAQ-listed company with a market cap of over $10 billion and has earned recognition from CanStar for its outstanding value. So if you're ready to invest, download the moomoo app today and join a community that supports your financial growth and dreams. Jessica, thank you so much for being on the show. And I really want to continue on our conversation about just really empowering people out there to take their financial future seriously and start investing, because you and I both know that saving isn't going to get you to where you want to be long term. It's not going to give you that longevity and that stability, with inflation and the rising cost of living. So what I want to talk about is actually finding that inner confidence to actually do this. And a lot of people sort of are so scared of making mistakes. What is your advice for actually building your confidence as let's call them a beginner investor, and overcoming that fear of losing money? Because, we always have to remind people that obviously investing is, it's a long-term game plan. There are risks. There is, a high level of volatility. That keeps people often stuck, and they're missing obviously the opportunity. So I guess what would you say to that person who is hearing all these different things but can't find, I guess, the faith and the hope in themselves to actually do this?
So just start. So start now, but start small. And then once you see how much your investment has gone up by, let's say, for example, if you picked to buy, if you bought a stock tomorrow with, say, $5, taking that start small approach using the fractional shares, if you bought $5 of Nvidia, or if you bought $5 of Tesla, and then you didn't look at your portfolio for a couple of months, come back and look at it. And if it's gone up by, say, 5%, 6%, then you might have that assurance like, okay, I think I know what I'm doing. And maybe even if you looked at it, say, in 6 months from now, then also you might get that assurance. But even if you didn't want to stock pick, like why would you stock pick when you wouldn't trust where the most funds in the world are? And that's in the S&P 500, the world's biggest ETF called SPY. If you invested in that earlier in the year and you put in $5, it'd be up by 26% by now. So if you just even took that, keep it simple approach, put in $5, you probably will. Probably there's a 99% chance if you invest $5 today, it's probably going to be higher in 6 months from now. So start small, build up your confidence that way and go, okay, cool, and I see what I'm doing.
Definitely. And also I think in between those periods of times where you're ready to invest again, like make sure you're educating yourself, like read, the moomoo app I think is one of the best apps I've come across. There's so much information, but more importantly, it's not intimidating. It's very easy to read. It's very easy to understand. Like you invest $5, close off, don't look at your portfolio. And in the meantime, for the next 2-3 months, keep learning. And I'm always learning all the time. It doesn't stop. And then when you feel like, okay, I feel a bit more confident about what I'm doing, and you've got another $5 ready to invest, do it again. That consistency and that habit system is so powerful, and it really does get you sort of on your way. Can we talk about just mistakes? Because I know I've made plenty of investing mistakes. I don't think there's a perfect investor out there. And I think people need to understand, I think people wait until everything's perfect before they actually make that leap. But of course, that scenario doesn't exist. What are some of the mistakes you've made when it comes to investing, or challenges that you've had to really overcome? And what did you take away from those experiences?
So I think for me, to be completely honest, one of the biggest mistakes that I've ever had is being greedy. And so Warren Buffett talks about this a lot. He said you need to be fearful when others are greedy and greedy when others are fearful. What does that mean? So when you see the stock market, let's say, for example, NVIDIA earlier this year, its stock was down 20%. But when it was down 10%, then there was max fear. People started to sell more. And then NVIDIA, from peak to trough, it was down 20%. People were panicking. But that's actually not what the investment world do. The people who manage money for a living, they're buying into that stock when it continues to fall. They're buying it at cheaper prices, believing in the long-term narrative. And I think if we go back to what you were saying, if you're upskilling yourself, if you're learning along the way, if you're using Moomoo's app, our app actually gives access to tools and to news websites that traditionally you might have to pay for. So we'll give you access to Dow Jones Newswise. We'll give you access to Bloomberg, for example. So you can actually read what Wall Street are saying about NVIDIA, and then that can give you that assurance that, okay, even though the stock is falling, I might be buying more. So that would be another mistake that I might have. So selling and believing that we might not see a recovery. So what happened earlier in the year was there were credit crunch concerns picking up, and people were worried that Japan raised their interest rates for the first time in 17 years and it was going to cause the stock market globally to collapse. And then the S&P 500 fell, and then the NASDAQ fell. Australia's market fell, and lots of people were panicking. I sold some of my shares. But I was still up because I bought it at a much cheaper price. But I just wasn't sure how long the fall would go for. So I wanted to de-risk.
And I say that noise, but Harry Hindsight never made a bad decision. If the market obviously had fallen and continued on falling, selling was a smart idea.
Yeah. So I think we make lots of mistakes along the way, but it's about how quickly you adapt. And it's the opportunity cost. So another mistake would be that I didn't buy more because I bought back in, right? I bought stocks when the market had fallen. So the US S&P 500, the biggest 500 stocks, that fell about 7%. The NASDAQ fell pretty heavily. Some big tech stocks fell very, very, very heavily, down 20%. So, mistake one, not buying more when the chips were down, tongue in cheek. And then another mistake was also being greedy, like I was saying initially. So once I've got a stock and it's in my portfolio and I can literally see, because on the Moomoo app it tells you how much your stock is up by. If I see one of my positions is up by 20%, then I'll come back and look at it next week. It might be only up by 13%. So the reason I didn't take and sell some of that, if I'm taking a trading approach, not investing, is because I was greedy. So I missed out on 7%. So I could have taken 7% of my gains off the table, and then that I could use that to pay for a holiday. So different things. There's always so many scenarios. It depends on your strategy and what you're really looking to do, like build long-term wealth, but also maybe generate passive income. You can do both of those things from investing and trading. It just really depends on what you want to do.
Yeah. Talking of what you want to do, what do you do once you've bought your first parcel of shares? What would, so I've spoken to some people and they're like, I've bought my first parcel of shares. I'm now an investor. I'm like, great. What are you going to do next? They're like, I don't need to. I'm now an investor. I'm like, no, you, as we've spoken about, you need to consistently contribute. You need to review your portfolio. You need to build it and ensure it's diversified. What would you recommend someone does who's, for example, just bought an ETF, for example? Where do they go to from there? I mean, what is your, general advice to make sure that they are actually building financial freedom for themselves? And what tools would you recommend to help ensure people are building a diversified portfolio? Because no one talks about diversification these days.
It's a great question. So on our app, you can explore different investment themes. So just to answer the second part of your question about diversification, so you can actually see what is doing particularly well in the stock market. And so, for example, you can see that the US election investment theme is gaining a lot of popularity. So with Trump, being inaugurated on the 20th of January, you can click on that and you can see what stocks are doing really well, what investors in moomoo. By the way, we've got 23 million. There's 23 million globally. So you can actually see also if they share their trades, what they're buying and selling, and some of them might disclose what stocks they're in and how much profit they've made, etc. But you can actually see, going back to that investment theme, what stocks should also be on your radar. So you can see at the top, you can see Tesla is doing particularly well. So you could argue that Tesla is the biggest benefactor of Trump getting into the White House. And there's a good reason for that. It's not just because Trump and Elon Musk are now best buds, apparently.
For the time being.
Yeah, for the time being. But it also means that, Elon Musk's Tesla can actually wave through these key catalysts that are likely to drive Tesla shares higher. So self-driving, full self-driving, and also the cyber cab. And so once we get those approved in the US, all they needed was regulatory approval. Then that means that Tesla shares could march higher once Elon Musk gets that approval from the Doge department, or rather the US government at large. But look, I went off on a tangent there, but bring it back home. When you're diversifying, just have a look at other ways that you can spread your investment assets. And there's a lot to be said about having a concentrated portfolio. Concentrated portfolio is the quickest way to build wealth. But if you don't want to see losses month in and month out.
Volatility and risks.
And volatility. And you don't want to be checking and trading your portfolio. If you're not a trader, then you need to be considering diversification. And so another great way to diversify is thinking about all the other asset classes. So gold, we know gold has done really well this year. Gold ETFs, for example, GLD, that ETF is the world's biggest holder of gold in the world. So it holds $7 billion of gold.
Wow.
Yeah, $7 billion of gold. So most investors, when they are looking to diversify their portfolio, they might hold US stocks, they might hold Aussie stocks, they might hold some gold as well. So think about, not just having higher risk asset, but also assets that do well when markets go into turbulent times. And then also, it would be remiss if we didn't point out Bitcoin. A lot of investment managers are increasingly putting some of investors' funds into Bitcoin. It might be 5% of your portfolio. Don't put 100% in your portfolio, 100% of your portfolio in Bitcoin or the world's biggest ETF, IBIT. Don't do that unless you want to see volatility. But think about why Bitcoin will be higher in 2025 and 2026 and 2027 if the US government makes it a key reserve asset.
I mean, it's funny, listening to you, I'm like, I feel like so dull and boring. Like my investment strategy is very much, long-term. Buy and hold. I very rarely sell. And, I use a lot of ETFs and listed investment companies, and then I will sort of cherry pick particular companies that I really love. I really want to, have a finger in that pie. And I'm very much someone who's, I'm growing my passive income. That is obviously the dividends, ideally the franked dividends, so that I can earn enough money to be able to, if I want to, quit my job. I probably would never quit my job because I love what I do and I don't view it as work, but it's not by force, it's by choice working. And that's my ultimate goal, is to build, a serious 6-figure passive income stream from dividends. Your strategy is a lot more interesting and, dare I say, like sexy, because, it's, living in the moment, finger on the pulse at all the time, but more importantly, like making sure that you are on the money when it comes to knowing what's going on in the market and what the trends are. And obviously that's the great thing about moomoo. It gives you just a brilliant source of information that's easy to digest. What would you recommend to help people really stay focused when it comes to these busy times where there is lots of noise, there's lots of things happening in the market, that those high levels of volatility, breaking news and so forth? Like, how do you stay focused on your goals and I guess not have knee-jerk reactions or get caught up in that herd mentality when it comes to your investment decisions?
I think you need to think about your own goals. Like, what are you actually wanting to achieve? So my personal portfolio, I take on more risk, and I treat that as how I can build side income for myself to pay for my holidays, to build up money for a deposit for a property. But I think about my self-managed super fund, it looks very different. It's very long term. It's with those dividend payers like you talked about. So BHP is my biggest position, for example. A gold stock is my biggest position. So how do you kind of turn down the noise? So you just need to think about your goals. Like, what are you trying to achieve?
Bring it back to you.
Yeah, absolutely. Everyone has got a different strategy. So I think maybe set a target for what you actually want to achieve. Write it down.
And so important to write it down.
I 1,000% agree. So whether you're trading, which is what I do with my personal portfolio, when I'm in my self-managed super fund, I'm investing for the long term. Regardless, you need to track your investments just like you would do your tax at the end of the financial year. You need to write down your reason for buying a stock, buying an ETF. Why did you go into it? Is it because the world is phasing out petrol cars by 2050? Is that why you bought Tesla, or is that why you bought the EV ETF? Is that why? Has it changed? If it's changed, then you might consider reviewing that investment. Maybe you would change it out. But I guarantee you that EVs are here to stay, as an example. But if the thesis changes and the long-term trend and your reason for buying a stock has changed, then you would consider going out of it. At the same token as well, Kano, like if a stock falls heavily, so for example, WiseTech Global is one of Australia's biggest tech companies. If their shares fell and your thesis of the company changed, then you might sell it. But would I personally sell a company that's got, say, 100% of its money coming in from recurring revenue? Probably not. It sounds more like Australia's version of a Microsoft, if I'm honest. So yeah, I may think about maybe even buying more when the stock fell. That's just as an example. Write down your trades. If it's something changes, think about, do I need to sell this investment? Should I review it? Should I buy more when it's down? If your reason, the catalyst for going into that stock has changed, then like we're saying, consider closing out. There's opportunity cost. There's always a bull market somewhere. A long-term bull market. So focus on the long-term trends and use a spreadsheet.
Can I ask you just one final question as we work towards the end of this episode? When I launched SugarMamma, which was, I think, 10 years ago, it was born out of my passion to help people with money. And I guess my reason for, empowering people to take their financial future seriously is the one area of our life where we actually have so much more control, than we realize. And it takes just the simplest little things first to really have a profound impact in improving our sense of financial well-being. In your opinion, why do you think it is so important for Australians to take their own financial well-being seriously, and more importantly, to actually stop lingering around the elementary level of saving, but actually move into investing, even if it's just, as you said, small amounts through, the fractional investing? Why is it so important today?
Investing can change your life. There's no ifs, there's no buts, there's no maybes. Investing will change your life. And all it takes is one investment or one company to really transform your life and really fast track your wealth. You can get ahead financially quicker. You can get on the property ladder quicker if that's what you want to do. You can retire earlier. Whatever it is, investing can fast track your way to financial freedom.
And finally, what is the last piece of advice, or I guess you could say maybe encouragement, that you'd like to leave our listeners with who are thinking about starting their investing journey today?
Invest today, start small, invest as often as you can and with as much as you can, because you're investing in you and a future you. And investing today and reoccurring on an ongoing basis is the best way to shore up your future self.
I couldn't agree more. Thank you so much for coming in. I really appreciate taking the time out of your day to come in and share your story with us, and also, more importantly, your wise and practical advice. And, I know personally from using the moomoo app, it is absolutely brilliant. I'm actually thinking of shifting the $1,000 project portfolio over to moomoo as well, which is a 6-figure investment portfolio now. And it's,
well done.
I really, I started that with $1,000. I haven't really invested anything over the last 4 or 5 years, barely anything. I've just reinvested because I've been focusing on paying down the margin loan and I've had other personal things going on. So, I'm ready to turn the $1,000 project portfolio into a 7-figure one. So hopefully I can do it with moomoo, by my side. So thank you so much. And finally, as we wrap up today's episode, thank you so much, of course, for moomoo, who sponsored this episode of SugarMamma's Fireplay. If you're looking for a smarter, easier way to invest, moomoo has you covered with low fees, intuitive tools, and expert-driven insights. I can personally tell you how fabulous this app is. Join the moomoo community today. Download the app and start your journey towards financial freedom. Please start. With moomoo, investing has never been simpler and more inspiring, and might I add, fun. All right, everyone, thank you so much for listening to today's episode. If you could take a moment to leave a rating and a review, I would greatly appreciate it. And as always, if you found this episode interesting and valuable, make sure you send it to a friend. Ciao for now, and I'll see you next Monday morning on Sugar Mama's Fireplay.